Hi, welcome to D Street Analysis and Insights, a monthly video series on Indian equity markets. I'm Archit Singhal, Portfolio Manager, Equity Advisory PMS, Centrum Broking Limited. Today's video has two parts. In the first part, I'll talk about a quick roundup for the year 2023, and in the second part, I'll talk about the outlook for 2024. Starting with a roundup for 2023, there are three main tables to discuss in this section. In front of your screen, you can see the performance of key global indices for 2023 and for the last 3 years. As can be seen, US, Nasdaq and MOX Russia were the key top performers in 2023, whereas China Hang Seng were down in 2023. From a 3-year perspective, Indian indices were the top performers, whereas China Hang Seng were down by 35% over the last 3 years. Just one data point here, Hang Seng index is virtually at the same level as what it was in 2000, implying negligible returns for the last 23 years. Next, you can see a table which is indicating the performance of the key macro parameters. As can be seen, US 10-year bond yield as well as Brent oil have come down from their 52 weeks high, which were in the months of September and October. This was primarily one of the reasons for the up move in the global equities in the last 2 months. Also, INR has depreciated by only 0.5% versus the USD for 2023. Next, we move to the performance of the key sectors and indices within the Indian markets. As you can see from the table, Nifty was up by 20% for year 2023, and 14% of that return came only in the last 2 months. Small and mid-cap indices outperformed Nifty by a significant portion, and they have more than doubled in the last 3 years. So we are starting 2024 on a very high base, especially for the small and the mid-cap indices. The reasons for the sharp up move in the Indian markets in the last 2-3 months were one, easing of US 10-year bond yields and Brent oil from the highs of October. FI flows have been healthy, especially in the month of December. State election results were positive, which came in the month of December. And finally, earnings outlook has been good. Now moving to various sectors, as you can see from the bottom table in the chart, Nifty Bank was up by 12% and actually underperformed the other indices. Among the top performers were PSC index and the realty index. Now we move to the last part of the video, which is the outlook for the year 2024. To gauge the outlook, we look at basically 5 factors, which is growth, interest rates, valuation, liquidity and sentiment. So growth has been healthy. Nifty profits have been up by more than 25% in first half of FY24, and outlook for growth also remains good. Liquidity has been good. FIs have turned back buyers into India, and domestic SIP flows also remain healthy. In terms of interest rates have mostly peaked across the world. Fed has paused for the last 3 meetings, and there are indications that there will be 3 or 4 cuts in the next year. Moving to valuations, the chart in front of you shows Nifty forward price to earnings for the last 10 years. Nifty is currently trading close to 20x PE a 1 year forward, which is closer to +1 standard deviation of its last 10-year averages. So to summarize, growth remains healthy, interest rates have peaked, liquidity is good, FIs are buying back in India, but because of higher valuations and because of exuberance in the sentiment, investors need to be very selective in terms of stock picking in this market, and investors may look at a combination of reasonable growth at a good valuation. For example, one of the sectors is financials, which is growing well and valuations are reasonable, closer to the last 10-year averages. Finally, moving to the last part of the video, that is the key things to watch out for as we move into 2024. We would be looking at general elections in India as well as large economies like US. We would be looking at the pace and the quantum of interest rate cuts by the central bankers. Other factors to see would be FIF flows, trend in Brent and inflation, and finally the earnings growth for the Indian companies. That's it from my side for today. Thank you for your time and wish you a very happy new year.
Investments in securities markets are subject to market risk. Read all related documents carefully before investing.